Okay, so I'm the fourth accountant, and today we're going to be talking about making tax digital for income. This one is for the caregivers, childminders, and nannies that are the true backbone of the UK economy, doing the Lord's work. If you know, you know. So, if you are a sole trader or a private landlord that normally would submit a self-assessment, then basically what the government is now introducing from April 2026 is making tax digital for income. So rather than doing your year-end self-assessment, you will now be required, if your income is over 50k, to now do quarterly returns before then doing a year-end corrected submission if needed. So the corrections might be needed if you got some of your quarterly returns wrong, to then do your final submission through a ERP tool. So this will be something like QuickBooks, which has a very simple and easy user interface, or Xero, which is also something that's commonly used by sole traders. However, it is designed more for those that are considering scaling themselves and becoming a limited company, for example. So if you are somebody that is familiar with VAT requirements, so again, your earnings are over, say, or your revenue is over 90k, and you have to think about quarterly VAT submissions, and then making tax digital for income will work in a very similar way as well. So there has been a lot of fear mongering, I think, on the internet and on social media around this and the motivations as to why the government wants to do this. And again, it's understandable in the context that the government does feel as though it's becoming more of a surveillance state. There's a lot more biometric data being collected with respect to other initiatives that they want to introduce, like a digital ID card, for example, which has been something that was announced in the budget, as well as know your client requirements with respect to persons of significant control when it comes to listed directors in companies' house. So with that wider context, it does feel as though the government is being a bit heavy-handed, or it may feel that way. But actually my own view around this is that it should probably be viewed as a positive thing, because leveraging technology as a sole trader or a private landlord, I would suggest is probably a good thing. You do want to, if you can, take advantage of cloud technology and scanning technology. So this is optical character recognition, for example, to capture any receipts or transactions in relation to your business. So this might be invoices you're sending to your clients, or receipts with respect to expenses, tagging them to your particular records. So these will be your accounting records within, as I say, QuickBooks or Xero, and then basically taking advantage potentially in the longer term of AI automation. And the process should be relatively straightforward, actually. So all you would initially have to do, if you don't have a tool that does this, is purchase your chosen tool. So as I said, I have mentioned QuickBooks simply because it's quite easy, and Xero because again, it's a quite easy tool to pick up, and again, they're quite common. Link it to your HMRC self-assessment account, and then basically within the tool you should be good to go, because it will automatically interface once you've made that connection. You can also connect it to your bank account. So if you have a business bank account you're using or a personal bank account you're using as a sole trader, obviously because you're not a business, then you can make those connections, and it will then enable you to reconcile your records as needed. So you shouldn't really actually need to engage an accountant. And if you have an accountant for other purposes, then this is something they can quite easily help you with. So it's not something that should be particularly burdensome. If you start learning the technology, you'll actually should find it easier than keeping paper records and then manually then duplicating that effort by putting it into a software tool to then do your return. And the tool itself will have reminders and prompts and tick lists to make sure that you are staying compliant and that you are making your submissions at the relevant deadlines, which will typically be in 1 month in arrears from a quarterly submissions perspective, and from the year-end perspective, it will probably be the same deadlines that you have currently. So broadly speaking, I would view this with a bit of silver lining, and take the view that actually, if you get savvy with this technology and accustomed to the technology, then in some ways it will make your life easier. But obviously what it's addressing, if you look at it more cynically, is something that the Chancellor talked about with respect to the gig economy, and undeclared income. And the reason why, again, this feels like it's quite rough and tough on sole traders and private landlords is because they're not people that are typically doing anything wrong. But just because you're not doing anything wrong and you're unaware and you are ignorant of the fact that you are doing something wrong by not declaring income, it doesn't mean the government should not do things to address that and start collecting the income, essentially. So broadly speaking, the government is doing what it should be doing. We know why it's doing what it's doing, but ultimately, as I say, it should be doing this. And actually, as I say, it should be something that will make your life easier. And although there will be potentially a cost in terms of buying a QuickBooks license or a Xero license, that should be viewed as an investment in terms of saving your time around, as I say, keeping separate records and then manually having to enter them. And also, you don't have to follow any accounting conventions with respect to keeping your records up to date. It can just follow the normal cash accounting, i.e. you just record the money when it comes in, you record your expenses when they're incurred, and then you submit accordingly on a quarterly and yearly basis. So it should be relatively straightforward to do. So, as I say, my own feeling is don't worry, stay calm. If you're not sure what to do, by all means, reach out to an accountant, speak to somebody that's done this already, or use AI tools that can help you get yourself set up. Or actually, if you do have QuickBooks or Xero, ring them up and see what they have to say, right? Normally, they're in a good position to talk you through their platform and make sure you're understanding how to use it and getting the most value out of their tools. Because again, they're developing their tools all the time in the interest of selling you more stuff, right? So again, if you have the tool already, it's not going to cost you any more to stay compliant. So hopefully you found that useful. But as I say, if you are still concerned, my contact details are in the comments, and feel free to reach out or use the resources that are available to you already. But until next time, peace.